Oman rejects single currency, railway on track for GCC and forces bounce back. This is Inside Business.
Hello there and welcome to the programme. Let's first of all see how the UAE markets have traded today. December 29th, Lizzie Miller has today's market wrap.
The UAE markets today closed with a modest rebound after the Christmas break. The DFM index closed at 1,633. That's a rise of almost 3%. 200 million shares were traded with a value of 296 million dirhams. 20 shares advanced while 2 declined. The Abu Dhabi Securities Exchange also closed with a rise by 1% at 2,318. In total, 76 million shares were traded worth 157 million dirhams. 24 shares advanced and 11 declined. In our lead story today, plans for a single currency for the GCC has suffered a major setback. Oman says it has no intention of joining the Gulf Monetary Union, not by 2010 or at any other time in the future. Yusuf bin Alawi, Omani minister in charge of foreign affairs, was quoted in a local paper saying that his country did not see any benefit in adopting a single currency. Advocates say unanimity among the GCC is a prerequisite for the success of the single currency. Earlier this month, the DIFC launched a major case arguing for the success of the Al-Khaliji.
We're making the proposal that the Khaliji should be issued according to the agreed calendar by 2010, but that soon after that, the Gulf Central Bank, a common Gulf Central Bank, should consider moving towards a linkage to a currency basket and no longer only to the US dollar.
Heads of the GCC are set to give their final seal of approval for the single currency at a summit in Muscat today. The strength of the Gulf Cooperation Council will be further tested today as heads of state are set to approve plans for the first railway for the region. The 1,940-kilometre rail route will link 6 member states and will cost $15 billion to build. In other news, the government is capping the number of freelance brokers entering the real estate sector. The move forms part of a package of measures to enforce a stricter criterion that needs to be met by anyone selling property. The Department of Economic Development and the Dubai's Real Estate Regulatory Authority have joined forces to introduce a new system to allow for greater transparency. The agreement comes in line with the government's aim to support the progress of the real estate sector in Dubai. In other news, Dubai Investments looks set to take a major blow from its financial investments in the fourth quarter. However, this is likely to be offset by the solid overall results from the company. Dubai Investments is the UAE's largest diversified holding firm by market value. The company registered third quarter net profits of $172.9 million. That's a rise of 137%. Dubai Investment says it will push forward plans to sell stakes in one company each year. On a positive note, the capital city is pushing forward major plans to boost its tourism figures. The Abu Dhabi Tourism Authority is set to triple its presence at overseas exhibitions for 2009. The capital city plans to open a further 4,000 hotel rooms over the coming year. This will bring the total capacity to over 17,000. The additional supply matches forecasted increase in demands over 3 million hotel guests in 2013. The city believes expansion is essential to support its hotel investment stakeholders by creating a world-class destination by 2030.
Time once again to track those numbers. Let's now see how the GCC and MENA markets have traded today, starting off with the UAE general indexes. Coming up now, let's have a look at the major international currencies against the dirham, followed by the price of oil and the precious metals. On the way in part 2 of Inside Business, Birgit Nischork will be talking about the make or break world of customer service and how return customers, even here in Dubai, should be nurtured. That's when we return. Stay with us.